All right, I'm going to try to go over 9 stocks, 2 of which are reporting earnings tonight. I'm going to give you some basic trend lines to be watching, the opportunity to the upside, the opportunity to the downside, and I'm going to briefly cover on some important news and data that we got this week and we're getting tomorrow. This is the Stocks with Josh show. Thanks for tuning in. Hit the like. It sends the video out to more viewers. Hit subscribe if you need good market analysis and technical analysis on fast-moving stocks and crypto. Okay, let's talk a little bit about some of the data that we've gotten so far this week. The very first news data that we got this week was the JOLTS report, and it came out as a surprise. It was a beat of expectations. More jobs were added in the private sector than was expected. Now, that gave a little bit of a bump to the markets in the middle of the week, but I've been talking consistently for the last 2 weeks about the market having selling pressure going into the election. Some people doubted me, especially after we got a little bit of a rally, but largely, if you look at the chart, we've been steadily moving down, and we're having a pretty rough day today. The market's selling off, and I think that we're likely to have selling pressure tomorrow. No guarantee. The bottom line is that the market is likely going to go risk off leading up to the election, because nothing in this world is certain. Even though the market has priced in a Donald Trump win, is what the market's been talking about, and they believe that there's some favorable dynamics to that for the overall economy. The fact is, we have no idea what's going to happen next week, and so the market's going to go risk off as it has been going mostly since the previous Thursday. We're still selling off. Tomorrow could be another down day, but there's quite a few stocks and crypto that are holding up pretty good. I'm going to tell you ones that are looking more bullish and some that are pretty bearish. I'm going to go over 9 stocks as quickly as I can today. Let's talk a little bit about the GDP that we got yesterday. It came out at 2.8%. It was largely interpreted as a good read. The reason why it wasn't even higher was because there's been a surge in imports, and there's a number of factors that are calculated in creating that GDP number, and one of them is a balance between exports and imports, and we saw a surge in imports, which the market believes likely could be temporary, which means that the GDP could have even been higher or will be higher in the next read, and so the market largely interpreted that as bullish as well, which is why I've been talking about the fact that I don't see the catalyst at the moment for the markets to crash, especially as we go into next week and the election. It's always, whenever the election, whenever you have a change of power, oftentimes it presents this idea of new possibilities and new opportunities, and the ability for the American economy to possibly take a step forward. People tend to be optimistic after elections, after there's been a win, and so again, the market can rally the entire month of November. And then today we got the PCE data, which moved down to 2.1%, getting ever closer to the Fed's target goal of 2%. But now we've got to wait for some important non-farm payrolls, jobs data, the unemployment report that we're going to get tomorrow. And that's going to complete the picture. If that turns out and shows that the market is actually adding jobs, or that unemployment is just simply within expectations, I think that we could be setting up for a bump, especially because we've pulled back so much over the last 10 days. So I think that jobs data is going to be crucial for setting up next week, going into the election week. That would actually give us all positive data reads. So the market's largely just selling off because of the concerns regarding the election. The data this week so far hasn't been bad. The last piece of that's going to be the jobs data tomorrow. All right, now before I get into the stocks on watch and the stocks that are going to be reporting earnings today, let me briefly talk about the Stocks with Josh Discord. I went live Wednesday for the entire community, and right away we got a nice win, a quick $200, $300 win for most people that were following me. Later in the day, I did another trade. Now that one had to cook a little longer. When I signed off, I was a little bit down, but I told everybody, I said, I largely think we've confirmed bullish and that this will turn positive. I added more calls, was able to sell that one for a profit as well. But most importantly, in that live session, I taught how to trade structure and how I do my daily trade setups for the SPY or Tesla or anything I'm trading. And today was a perfect example of how, if you followed that pattern that I've been teaching on the Wednesday and Friday lives, you would have made a ton of money. Because very early in the morning, we've got a beautiful 5-minute candle which confirmed beneath our morning market structure, our pre-market structure, and VWAP. It confirmed the whole downturn that we experienced all throughout the day. If you followed that precisely as I teach it, you would have gotten a huge percentage win on trading SPY puts to the downside today. So that's what we're teaching. Join the Stocks with Josh ChartGoat University Discord. Trade with me, trade with the Crown Traders. I'm not the only one printing wins in there. Spy Lord had a beautiful win yesterday in the afternoon, a 40% win that he shared with everybody, as well as Wolf of Gatsby, who's constantly providing technicals there and trade alerts. So come check it out, get invested, and get plugged in. Learn to chart, learn to trade with the community. Okay, let's talk first about SMCI. Now, I know you guys have been hearing a lot about it, but these guys have massive auditing concerns. There is the concern that these guys will be delisted and possibly forced to go bankrupt. And then we had the news of their auditing firm literally resigning. So these are the guys who are in charge of making sure that the books are in order. Yesterday it dropped 30%. Today it continued to decline. And there's absolutely the concern that this can continue to drop to being delisted to going bankrupt. Now, this is a huge concern because they're the third largest customer for NVIDIA. Now, we've got NVIDIA's earnings ahead of us in November, but it's been causing a huge amount of negative pressure on the stock price of NVIDIA, dragging it down because of the correlation between the two companies, and it is a concern. Until NVIDIA can shake them loose, NVIDIA is going to continue to remain under selling pressure. Now, the only thing that can cause it to pop right now would be next week's positive election result and conclusion could cause the market to rally, and it'll bring NVIDIA up. But it's not going to be until the earnings that NVIDIA can potentially get some distance between them and the drama surrounding SMCI. Above 130, you want to be long NVIDIA. If we get beneath 130, there's the possibility of coming all the way down to that 120 level. Now, the other thing I want to mention about NVIDIA is that I have heard a lot of large investment firms and hedge funds and companies and individuals that took profit way too early on NVIDIA and have been waiting for an opportunity, a FUD moment, a problem moment, exactly like this one, to buy the dip. And so I am not believing that NVIDIA is going to fall apart and that the stock price is going to drop down significantly below 120 or get anywhere back close to 100 or below. I believe that there's stronger opportunity that we're going to see a $160 NVIDIA over the course of the next couple months. That's my particular view on NVIDIA. Okay, Google. Google absolutely crushed their earnings, had an incredible quarter, but the problem is that afterwards, people were selling into the strength. A lot of the gains were given back. That's a huge concern. And then today, I found out why. That's because OpenAI has launched its ChatGPT service. Now, this is a huge concern as they are potentially going to be a problem for Google's massive market share in the search engine business. Google dominates with 91.62% of all search engine business. And the fact is they have way more to lose than to gain. And we know 100% that AI is a business disruptor. And if these guys cannot get ahead of ChatGPT, who's, I think, largely, it's been argued, is in the lead, well, then they're going to have a very hard time holding on to that market share, which means that even though Google absolutely crushed it, there may be more risk to the downside. So watch what Wall Street does and follow their lead. What did Wall Street do? They sold into Google success. They sold into strength. And so that's definitely something that we need to pay attention to. AMD. They did really well, but they gave bad Q4 guidance, suggesting that they would miss Q4 by a $50 million difference in revenue, and that's a pretty big problem. And the stock was largely priced to perfection, and afterwards it sold off. Now, I'm looking at the AMD chart, and I've pointed out to the Stocks with Josh community that I see that it's been in a bearish trend for a long time. We've had 2 back-to-back bearish ascending channels, and it continues to break lower. I will warn you that if we get below $141, well, then the bottom is really going to fall out beneath AMD. Not suggesting that will happen. We got to watch 141 because that's where it has to bounce for this to begin to reclaim some ground, to reclaim some price action. But the chart's been bearish and is still bearish, and it's still showing that it's in decline, and that decline has not produced a reversal yet. And so this is a stock that's in decline, and so you don't want to be thinking about calls, okay, on call options or even going long just yet. You want to follow the charts and follow the market and wait for the market to tell you that smart money wants to load back up on AMD. Don't try to outsmart Wall Street. You and I cannot do it. We want to follow the charts and follow the money. Okay, let's talk briefly about NVDA, ticker ENPH. Now, I gave a video on this last week when they did their earnings, and I did a lotto trade, and I said something in my video. Now, the lotto trade was purely a lotto trade play on earnings, which is a 50-50 deal. Now they didn't do well, and that lotto trade the following morning went down to practically nothing. It became worthless right away. So I lost the $1,000 that I had speculated on NVDA's earnings. Now, I had some people say to me the following day or in the next couple of videos in the comment section, Josh, you never talk about your losers. You were wrong about NVDA. Well, let me just be very clear. I'm going to take a minute and talk about it. Lotto trades are trades that I do with money that I have made during the week of the earnings. Now, if I haven't made the money to put on a lotto trade, if I haven't made money that week, well, then I don't give myself the privilege of taking a lotto trade. But because I only want to speculate on a 50-50 deal because I don't know how they're going to do, I only want to speculate with money that's purely profit. So it's the first rule of a lotto trade that I want to go over with you. The second thing I want to comment regarding that earnings is that I was 100% right about the guidance that I gave in the video. If you go back and you watch the video, this is what I said. I said this was a buy for a bounce the day after earnings. And if you go look at the stock, it went up over 12% in the next 4 days after earnings. And so I'm going to I don't mean to, upset anybody, but NVDA, the call that I made on the video was 100% accurate. Now, if you didn't mitigate risk on the lotto trade that I jumped into in addition to my call that I made in the video, well, that's something that is a learning opportunity, and you want to learn from your losses. What was there for me to learn on my NVDA loss? Nothing. It was part of a understood risk scenario that I knew going into it. Now, if I had risked more money than I should, well, then I would have learned to follow my third discipline, which was to control my position size. But I followed my disciplines, and my disciplines are trade the trend, use a stop loss, control position size, and don't revenge trade. I followed those. I teach those. I hope they can help you. All right, let's talk about PayPal. PayPal selling off. It went up a lot before earnings, and it was an obvious buy the rumor, sell the news. They did do well. They actually had a great earnings, but it sold off afterwards, similar to Google. I think largely it's the macro environment. People are locking in profits on winning plays, which means that once we get through this environment and possibly after the election, PayPal might be a stock of interest again. And one of the very positive news items that came out of the earnings was that they're definitely buying back a ton of their stock, which will ultimately help the underlying price of PayPal. Okay, SOFI. Let's briefly talk about SOFI. Now, SOFI, I wanted to talk about PayPal and SOFI back to back because I wanted to make the point that PayPal may not be the best fintech company to invest in. If I had to choose between PayPal and SOFI, 100% I would choose SOFI. Now, SOFI sold off as well, and I talked about that in my video last week, and I said the problem with SOFI is that it's run up near 50% before earnings, and more than likely people are going to take profit, even if it ripped a little bit more. I told everybody there was going to be selling into success on SOFI, and that's exactly what happened. Now I'm just going to be patiently waiting for SOFI to come back to a level of support where I will buy some more, because I think that overall this is going to continue to be an uptrending stock even when it gets hit. So this is one of those stocks that I like long-term on pullbacks. Okay, let's talk about the two companies that are reporting earnings. This video may go out while those earnings are being released, and I'm just going to share my thoughts on these companies anyways. Whether I'm right or wrong, and the video could be airing, and it could be doing the opposite of what I'm saying. I'm not afraid. If there's anybody who trusts my technicals the most, it's me. I trust my technicals. So I like Amazon over Apple. So I'd be curious to see what happens. I like Amazon over Apple. Now, doesn't mean that Apple won't crush it, but they've had a ton of problems, guys. So the iPhone so far has gotten a lot of bad PR, especially on TikTok and social media right now, from people that have loved Apple products, have not liked the most recent phone. And so even if they beat expectations, I have big concerns about Apple. And so because of that, I've talked about their VR headset. I bought it. It's just a paperweight, $4,500 paperweight with all the accessories. It was cool, but it's impractical and uncomfortable. And the phone could be good if the artificial intelligence launch was going in full scale, but it's coming down the road. And so I think that more than likely, I'd be just shocked if this was a tear your face off, rip up moment. And if there is any positive earnings that come out on Apple today, I think it's going to be a buy the rumor, sell the news event. But the rumor is bearish, so I'm not loving Apple right now. Below 225, Apple gets ugly. Okay, so I'll keep it that simple. Below 225, Apple gets ugly. Could be an area where it might bounce, so watch the chart. Let's talk about Amazon. Now I'm more bullish on Amazon. I did have a lotto trade on Amazon, limited position size, because my risk tolerance is low, because the earnings that we've been seeing so far have been, even if they've been good, they've been getting sold off. And so we're still in this pre-election week. And so we might continue to see selling even on companies that beat. But I like Amazon. I will point out that it's got a bearish head and shoulders pattern on the chart. Now you ignore that pattern until it gets confirmed. Now the neckline on that pattern is around $178. And it's only if the price were to come below 178 and be low 178 for 1 or 2 days. If it stayed there below that price, it would confirm a breakdown, and then it's watch out below, because it's going to drop another $15 or $20. But at the moment, Amazon has had a couple down days, which I prefer, right before an earnings. They could potentially be a beat. Now, above 190, this thing is going to $205. That's my prediction. So let's see how it plays out. I'm going to try to get this video out so you could take advantage of all of these details on these stocks I covered today. And I'm going to be doing live trading tomorrow in the Stocks with Josh Discord, where I'm going to be teaching how to read the charts and how to have conservative entries that if you learn to do consistently, you can be a consistent winner on Wall Street. Then you'll have the money to do these lotto trades on these big companies that report earnings, because those can be really fun. You wake up the next morning, you're up 100, 200%. The best one I've had recently was the TSM, went up 500%. That blew my mind. But you can lose 100% of your money as well. So you gotta, but this is the game, guys. Appreciate you all joining me today. Peace and blessings. See you over in the Stocks with Josh Discord. Take care. Hit that like and subscribe before you sign off. Bye-bye.